Invest smart mutual funds ke saath. That is a new series on which we would be ideating, debating, and again emphasizing that every time when people ask us for a tip, I guess the side tip is do not cancel your SIP, but increase your SIPs. Why should you increase your SIPs? And if you don't increase your SIPs while you're walking on the right direction, you are actually walking slow. So if India is growing, the best way is to participate in India, and the easiest way to do that is to increase your savings and allocation towards SIP. And let's take that conversation forward. Let's take that thought forward with none other than Mr. D.P. Singh of SBI Mutual Funds.
Thank you,
nice to have you, and thank you for associating with ET now in this program.
Thanks a lot.
When I started my career, SIP was a concept. It was an idea, but it appeared like a complicated process for anybody to bring on board.
Yeah.
Today ये घर घर की कहानी है.
Yeah.
बट ये घर घर की कहानी कितने दिन और चलेगी?
देखो, जो घर घर की कहानी होती है वो सदा के लिए चलती है. आज की डेट में भी अगर हम 10 साल पहले जो घर घर की कहानी कहते हैं तो दैट वुड हैव फाइन ट्यून्ड, बट दैट कंटिन्यूस. घर घर की कहानी का शेप बदल सकता है, साइज़ बदल सकता है. जो आपने सबसे पहले कहा ना, अभी उसके सबसे ज़्यादा ज़रूरत है वो घर घर की कहानी का साइज़ बदलने की. When we started, we were at 1,500 to 2,000 rupees average ticket size. Even the GDP growing so much and per capita income going 3 times, the ticket size is still 2,000 to 2,500. I am talking about the industry level. Say maximum 2,700 to 2,800. We need to take it to next level. A person who has a surplus of 50,000 rupees per month is also happy कि मेरी यार 5,000 की सिप चल रही है तो मैं इन्वेस्ट कर रहा हूँ. तो मेरा सबसे बड़ा आज की डेट में ये कि जो लोग पहले हैं 5,000 वाले, जो 2,000 वाले हैं, उनको 5,000 वाले को 10,000 करना बहुत ज़रूरी है. और 2-3 हज़ार वाले नए तो जो बॉटम ऑफ द पिरामिड या जो स्टार्टर्स हैं उनके लिए तो वो होएगा ही होएगा. बट आई थिंक वी नीड टू इंक्रीज द साइज. ये घर घर की कहानी को आगे तक लेके जाना है.
सो व्हाट इज़ द एवरेज ticket size in India, and what is the average ticket size for SBI mutual funds?
See, our ticket size, SBI being SBI, which is a banker to every Indian, and we are getting a lot of money from our proprietary channel. Our ticket size is little lesser than the market. Market is at 2,700, 2,800. We are around 2,300. So we need to take it to the next level for sure. And that's a challenge for the industry. I'm not talking about SBI Mutual Fund. I'm talking about the mutual fund industry. We have to take it to the next level. So we have to come out with the technology-based solution where the top-up happens automatically. Every year you can grow it, increase it by 5% or 10%. The moment you say every time somebody will go, somebody will trigger it, we as a class, we are lazy people as far as the financial decisions are concerned. Whatever machine does, the better. So we are pushing that idea, industry is pushing that idea, that it should be topped up every year with 5%, 10%. That itself will be a huge benefit for the industry and individuals. That will take care of all the seizures and cancellations also which happen over the period of time.
And I'm just bringing this point out for our viewers that in India the average inflation is anywhere between 4 to 6%.
Yes.
So if you've started a SIP and you've not changed the SIP for 5 years, you actually lose about 30% of your purchasing power.
Yes, of course.
So there is a very basic need that as inflation grows, if you don't increase your SIP, while you may be patient, you may be diligent, you may be disciplined, you can think long term, but the purpose of this entire exercise will be futile.
Absolutely, I 100% agree. There cannot be any other view, because that's why we are keeping the salaries, the incomes at the middle level are increasing at the double-digit percentage. Unless until you increase your SIP by more than that, you will not be making a right decision, and we have seen that because people are not increasing. So end of the year when the value of the money goes down, so what they saw in the beginning that I will be having this much money, the real value of that money will be much lesser. So that's absolutely important. And I'm not saying only SIP, even the SIP, STP, even SWP should be the part of the game, because when we are talking about the annuities or other things, if you want to have a real cash management system within the mutual funds, even systematic withdrawal plans are equally important as SIPs are.
The SIP investor, some would say, is a sophisticated investor. The fact that India has seen a huge SIP culture, the average number is about 13,000 to 14,000 crore, and
yes.
even in the market underperformance in last 1 year, the SIP commitment has been strong. So I'm assuming the SIP investor is a investor who's not counting days and quarters, he's thinking in terms of years.
Absolutely.
So if the investor is so evolved, why are they not increasing the ticket size? Is it laziness? Is it technology? Is it lack of awareness?
One, laziness. Second, they are not doing it in a very, very perfect manner. That they are not done in a planned manner. Somebody went, even the role of intermediaries is very important. The intermediation happens and it is given as a sale culture. That हमने SIP बेच दी तो हमारा काम हो गया. तो upselling and cross-selling is very, very important. People always look forward to get into the new investors, but the old investors continue to with the same old number. There's some laziness at the level of investors as well as the intermediaries. I think intermediaries need to work on it, and all the new SIPs should be registered with the top-up facility only.
Which is available now.
Which is available now.
So when you're enrolling a SIP, you can do it.
Yeah. At the time of registration only it's possible. People should demand it from the intermediaries that I want to register as the top-up SIPs. And intermediaries definitely should push for the top-up SIP only.
Let's talk about the nature of the investors in India. It is generally believed that if you are young, you should go towards equity. If you're old, you should go towards fixed income. Is that visible in the way how your collections and mobilization is also moving?
Yeah, actually the perfect data though is not available, but the asset allocation is being talked about in a big way. The education is happening, but if you ask me whether that is the ultimate, so we have not even scratched the surface. Education has to happen at a much bigger level. The asset allocation is something which we need to be talking about. And see today what is happening because of very limited number of individual mutual fund distributors. That is another challenge. And see bankers pushing to the creamy layer only because of the top line numbers, and the bottom line also happens through that. I think there's a challenge how to reach out to more and more number of people. This is a challenge for the industry, how to reach out and how to make it available, because one thing is very clear, though we talk about the digital, but the digital happens with the very few evolved investors. The others need phygital kind of thing, so that's a challenge. That's what we are grappling with, how to get more and more number of distributors into the market.
I'll start with a very simple question. It's a question which I've been asked, I'm sure you've been asked, and I'm sure you've answered before, but good things should always be discussed again and again. Like start a SIP, we discuss it again and again. For somebody who's starting fresh and wants to take his first baby step into the world of investing, should one simply start with the index fund?
Yeah, that can be done. That index fund is fine, but I think the diversified equity fund will be much better than this thing, because indexes have their own problems, especially for individuals. Index funds and the ETFs are more flavored in those cases where the investments are made in the fiduciary capacity. Because if I have to invest on behalf of somebody, then it's very difficult for me to tomorrow to justify why I picked up fund A to fund B. If it is an index fund or if it's an ETF, people who are doing it in fiduciary capacity or institutional investors, so then it's very good. But for individuals, I think diversified category is much better, because we feel there's lots and lots of scope of alpha generation in Indian markets as of now. But the journey in the equities must start at the earliest. In fact, the SIPs should be registered at the time of opening the salary account only. That is something very important. So any good diversified fund, any good flexi cap fund is the much better option, because if you look at the costs are not at all prohibitive. If you say 1.5% or 2% cost per year is not at all prohibitive, because even if you do any other thing, this is minimum which you will be paying. I always talk in terms of the net interest margin in a bank also. Even if the banks are charging 3 to 4% is the net interest margin, right? That's what is which is available given to the depositor and earned, right? So 1 to 2% is nothing. That is in regular plan, I think, and the evolved investors can definitely come in a much cheaper direct plan also. So that's also possible. But if you don't have that much of knowledge, it's always good to have a good distributor, have a good financial advisor who can work with you hand in hand.
When you look at the categorization of the SIP, at least for State Bank of India Mutual Fund, can I say that the equity investors are only those who are below 30, below 40, and folks who are 50 plus, they are not looking at starting new SIPs or are not looking at startup equity SIPs?
No, it's not the case. Actually, it's the other way around. More you are growing up, people want to are today taking more into the equities.
Shouldn't it be reversed?
It should be reversed, but the problem is that the youngsters are taking a very, very small. They want something fancy. They have been going into the F&Os. They are going into other sort of investments where they have already they have burnt the fingers. But the serious investments into mutual funds in a big way is yet to start. Either they are taking the direct equity bets, and then or because they have more risk appetite. I'm not saying that they are doing a wrong thing. If they are taking in a well researched manner, if they are putting into equities, it's absolutely fine. There's a market for that, and a huge market for that, and they should continue to do that. But some disciplined money, which they don't have to foresee for 5 to 10 years, they must continue with the mutual funds in the SIP route.
But everybody wants India to become Atmanirbhar. So everybody should become Atmanirbhar and buy stocks, buy SIPs.
No, actually that's very, very important. We should be Atmanirbhar as far as the Indian savers. One thing is very clear, that's a challenge for the country also. Our saving rates have to go up. And second, if they start putting in equities through mutual funds or otherwise, I think saving rates will automatically go up. Because generally you don't tend to use that money for the depreciating assets. Actually, the other day we were giving another narrative also. Whenever you are buying any depreciating assets like car or this thing, with the same kind of money, you should have an appreciating assets like mutual funds. It should be matching.
That's such a great point. If you're buying a depreciating asset, make sure that it's balanced, right equal to left.
Right equal to left, so that you don't lose out.
So a couple of follow-up questions. In India, like you said, either it is FD or FNO, and now SIP. ये बीच में fixed income आता है. And Indian fixed income products give a handsome return. And they almost 9 out of 10 times, until unless there's an elephant crisis, they end up beating inflation. It's a very simple product, but yet it is not very popular.
It's not very popular for the simple reason because the intermediaries are less educated on these products.
Do they get less commissions, that's why?
That is also true. That is also true because ultimately the commissions have to come out of the YTM margins, right? If the YTMs are, say, X percentage, and the net to the investor will be YTM minus the expenses. So if you keep the expenses very high and pay for the distribution, then net which is available to the investor is not very, very, very attractive. So you have to have a very balanced growth. So we have to keep the expense ratios low in the debt funds. And so that's what is happening now. But the education is a must. But what happens, the financial products are pushed, not pulled. So today, if you talk about the bank deposits, because there are thousands of lakhs of bank branches who are pushing it. If you talk about the insurance products, there are lakhs and lakhs of the distributors. In case of mutual fund, the number of intermediaries who are selling mutual fund products is very limited. And sometimes there are some perceived conflicts. The intermediaries who are selling, so the same either if it is a bank is selling deposit also, bank is selling insurance also, bank is selling mutual fund also. So they are also revenue driven. So wherever the revenue is there, so investor takes a second seat sometimes But my view is with the kind of crisis which we have seen internationally, especially in US now, that narrative that mutual fund debt funds are much safer than the very small banks, very, very crazy banks deposits also. Today people go by higher interest rates, that this bank is giving this much, this bank is giving this much. But nobody listens, thinks from where this interest rate is coming. So I saw yesterday in the Women, it was very crazy. On the first page there was an advertisement for a bank giving 8.5% interest rate. And on the fourth page, there was an advertisement that the housing loan is available at 7%. So, what is when you are lending at 7%, I'm not saying the same bank, but the other bank, but there has to be risk element which is there in the economy. The investors have to understand and see mutual funds being completely passed through being tax efficient, I think there's a big way when retailization has to happen. Till now, whatever has happened in the debt part and the fixed income side, the target audience have always been the corporate or institutional investors. So they have been getting the benefit of that. The retail investors have not benefited. I think a few ultra HNIs or revolved investors have got it, but we need to reach out to the masses. And there, my message to the intermediate, though the intermediation cost is that, but the ticket size will be much higher. That night, the absolute number will be very good. I think that's the message we wanted to give. We are educating our distributors also all across the country. We are doing the awareness program not only for the investor but for the distributors also, so that these products can be made household things. Ghar ghar ki khani ye bhi honi chahiye.
The term used by the current administration is that India ka, Hindustan ka Amrit Kaal chalu ho gaya. The golden decade for India has started. Yeah. So if this is the golden decade for India, which is what appears looking at the global setup and our positioning, then in this decade, what should an equity investor or equity SIP investor expect?
So I think they should continue investing, not only investing, increasing the ticket size has a long term, which is these are the golden rules, right? And they should continue to remain invested. Don't be worried about short term volatilities. They should keep it there. They will definitely have the multiplier effect if the Indian businesses are going to grow. So ultimately, what is there? Fundamentally, what is the profitability? What is the sales? How the businesses are happening? Those are getting into the equity valuations. So I, as an individual, can't get into every business, but if I have to be participative in the India growth story, which undoubtedly is going to be there in a big way, there's no other way but to participate in the equity markets. While saying so, SIPs are a good tool, but there are periods when we get the chunky money as an employee also, otherwise also, and financialization is happening. People are, I've got hundreds of examples where people are selling out their real estate and keeping money in financial assets. So lump sum money is also equally important. If I get a bonus, if I get some chunky money, if I want to put money long term for my child or for my retirement, I think SIPs are one way of putting in, but the chunky money also has to come into the mutual funds, maybe in a staggered way.
Okay, so let's look at now asset classes for this year. And again, these are not projected returns, these are not promised returns, these are indicative numbers based on historical averages of growth, P multiple. For next 10 years, or 8 to 10 years, can equity markets or equity SIP schemes give a CAGR return of 10 to maybe 12 to 14%? It may happen in a bunched up manner, but if you look at the linear average, is there a probability for it?
See, if we go by the historical numbers and go by what is the inflation rate, what are the growth numbers which are there, all put together, what you are saying is absolutely possible. And this has happened in past.
There is a strong possibility and a probability.
Yeah, possibility and probability. See, we have to always understand. We are living in a world where the uncertainties will continue, and see, but what are the other alternatives available with me? Even if we don't want to take any risk, then I will never get the inflation beating return, and I will always be losing money. If I want my money to work for me, it doesn't remain a lazy money. I have to take a call. But as you rightly said, today even the fixed income opportunities are huge, very, very attractive. And today, even if somebody doesn't want to take much risk into the equity markets, so fixed income opportunities are giving very, very good return, as high as 8 to 9% as you were talking about. So those are very, very safe kind of returns which can be made up. That is visible from the YTMs. YTM minus expenses is your net number. Though nobody is grunting, nobody is indicating anything, but this is how it is. This is how it will happen.
Last question. So one is we define the entire advice based on your age profile and time duration. Let me now divide it in terms of brackets. For next 1 year, for next 3 years, and 5 years plus. If you have to identify an instrument, which instrument would you advise our viewers to invest in for next 1 year? Somebody who's got 1 year money.
Yeah.
There are folks who got 1 year money.
1 year, I will definitely go for money market fund. So for 3 years, I'll go for a balanced advantage fund kind of thing. And 5 years, diversified equity fund. Period. Diversified, within diversified, there are so many categories. I mean, recently we did a lot of research on the dividend yield funds. So dividend yield funds, when we did more and more research, this is one of the best category. Because here the downward is, whenever the markets are going down, this category is going down less. And whenever the markets are going up, they mostly participate in that in the same number.
And the tax is not paid by, if you buy a stock, you actually end up paying dividend tax. In this, mutual funds do not pay dividend tax.
Buy stocks, and then whenever dividend comes, you have to pay tax and TDS is deducted. And if dividends comes into the dividend yield fund, are of course tax exempt, and those are reinvested. So that percentage in any case. And if you want to manage your cash, then definitely you can have a systematic withdrawal plan, which again is very, very tax efficient. So I personally feel that, and from the fund house size, this is a category which is very, very small, sideline kind of category. This can be very big category. And second is, when new businesses are coming, new companies are coming for the IPOs and all, the investment teams are trying to influence those companies to have a very clear-cut dividend-paying strategy. Unless until you have a very big capex plans, then the cash should not remain in the company too much. It should be divided amongst the investors. So we are trying to do that. And we have been very, very successful as a company to influence the dividend strategy of the company. And if there are good enough money and we can influence, when people are coming with IPOs, they will definitely come out with the clear-cut strategy. So that is very good for the investors in long term.
Makes perfect sense. Well, really appreciate your time. Invest smart, mutual funds ke saath. What an engaging conversation it's been. And I just want to put a footnote, so to speak, before I wrap. As a market commentator, I've been tracking markets for the last 20 years, and what all I've reported in the last 20 years: 9/11, 2008, 2012, COVID crisis. Today we are discussing SVB, but there was a time we were discussing GFC and PIGS, where instead of banks, countries in Europe, they were on the verge of bankruptcy. But what really matters is that all that is passé now. Today what matters is that the positioning of India is very, very unique. So in the short term, markets will always work on sentiment. In the medium term, it's liquidity. In the long term, is earnings and the potential of the economy. And this is where India seems to be scoring ahead. So stay focused, maintain your discipline, use the power of compounding, and never ever lose sight of inflation and the negative impact it could have on your financial planning.